All right, let's get into this because it's truly one of the most wild business stories of our time. We're going to break down Uber's entire product and business strategy. It's a story of just staggering losses, unbelievable growth, and a huge high-stakes bet that, well, eventually paid off.
I mean, this is the question, right? The billion-dollar paradox. For so long, Uber was famous for two things. One, being absolutely everywhere, and two, losing a mind-boggling amount of money. So how can those two things be true at the same time? How did a company that doesn't own any cars or employ any drivers grow faster than almost any business in history? So the first piece of the puzzle is figuring out what Uber actually is. And here's the most crucial thing to understand. It is not a taxi company. Not at all. It's a technology company that built what's called a two-sided marketplace. Just think of it like a digital matchmaker. It doesn't own the supply, the cars, and it doesn't create the demand, the riders. It just connects them really, really efficiently.
And this is where the genius of the model really clicks. Because they don't own cars, their business is what's called asset light. Now think about a traditional taxi company. They have to buy, maintain, and store this massive fleet of vehicles. Uber could roll into a brand new city with basically just software and a marketing team. This right here is the secret to their absolutely lightning-fast global expansion.
But let's bring it back to basics for a second. You can have the best business model in the world, but if your product isn't any good, none of it matters. Uber won in the early days because it solved real, incredibly annoying problems that we all dealt with. Waiting forever for a cab, having no idea what it would cost, fumbling for cash. Uber just made all of that disappear. That convenience created this massive, organic way of people wanting to use it.
So this simple little equation, this was basically the religion inside Uber for years. Every single decision was passed through this filter. The goal was not to make money on each ride. Not yet. The only goal was to grow. Get more riders, get more drivers, launch in more cities. They figured profitability could wait, but dominating the market absolutely could not. So, all those headlines you saw about Uber losing billions of dollars? Yeah, that wasn't an accident. That was the plan. It was a strategic investment. They were intentionally burning cash to make it happen. They subsidized rides to get us all hooked. They paid out huge bonuses to get drivers on the road. They funded these massive price wars with their rivals, and they poured money into future stuff like self-driving cars. This was just Blitzscaling 101. Grow at all costs, and we'll figure out the money part later.
And all that spending was designed to do one thing: kickstart this incredibly powerful engine. It's a flywheel, a loop that feeds on itself. See, the more riders that join, the more money drivers can make, so more drivers sign up. And with more drivers on the road, well, pickup times get way shorter. Shorter wait times make riders happier, so they use the app more and tell their friends about it, and the whole cycle just gets stronger and stronger.
So they've spent billions to build this massive network. But how does it actually, make money? That brings us to the monetization engine. Okay, so no surprise, the biggest slice of the pie is still the commission it takes on every ride. That's over half its revenue. But look at how much they've diversified. Uber Eats has become this absolute behemoth on its own. Surge pricing, which, we've all complained about, is actually a supercritical tool for them to balance supply and demand. And now they're even building an advertising business on top of it all.
And really, you can boil it all down to this one number. For every dollar that customers spend on the platform, that's called gross bookings, Uber gets to keep about 28 cents of it as its own revenue. This number is the key metric for how efficient their platform is. The higher they can push that number, the more profitable they'll be.
So for years, the big question mark hanging over the company was, yeah, but can they ever actually be profitable? And that leads us to the crucial next phase of their story, the pivot to profit. So what actually changed? Well, they basically started fine-tuning the giant machine they had spent years building. They started to pull back on those heavy subsidies and instead use their data to create much smarter pricing. They also stopped trying to be absolutely everywhere and really focused on the markets where they could actually win and make money. And of course, they used their existing network to grow other businesses like Uber Eats. And the result of that pivot was just dramatic. I mean, look at this. After nearly 14 years of losing money on purpose, all aimed at one single goal, dominating the market, the whole plan finally came together. In 2023, Uber posted its first ever full year of company profit. The long bet finally paid off.
So, what's the lesson in all of this? If you're out there building a product or a company, what are the key takeaways from this whole journey? Okay, first and foremost, and you cannot forget this, all the complex business strategy was built on a really simple foundation. Uber found something that was universally terrible:
getting a taxi, and just use technology to make it 10 times better. At the end of the day, that simple, powerful convenience is what started everything.
Second, you have to focus on building that self-reinforcing loop, that flywheel we talked about. For any kind of platform business, network effects are your fortress. They make the service better for everyone as it gets bigger, which in turn makes it incredibly hard for anybody new to come in and compete with you.
And third, Uber proves that in today's world, data is one of the most valuable things you can possibly have. They use their gigantic mountain of data to optimize everything: surge pricing, finding the best routes for drivers, even predicting where demand is going to be. That data is a massive, ongoing competitive advantage.
And all of that brings us to the final and maybe the most important lesson of all. This one quote really sums up Uber's entire high-stakes gamble. They didn't start with a profitable product and then try to scale it up. No. They built a massive, global network first, even while losing billions, because they believed that once they had that scale, the profits would eventually follow. And you know what? They were right.